Welcome back to the Babalian Money Show. Ever wonder what really happens when you hit that buy button on a stock? It feels instant, magical even. But behind that single click is a massive, fascinating system that connects you to the biggest companies in the world. Today we're pulling back the curtain to see how the stock market actually works. So where do stocks even come from? It all starts with something called an initial public offering, or IPO. Imagine a successful private company. Let's call it Awesome Gadgets, Inc. They want to expand, build new factories, and invent more cool stuff. But they need a huge amount of cash to do it. So they decide to go public. They divide ownership of their company into millions of tiny pieces called shares. The first time they sell these shares to the public is the IPO. By buying a share, you're not just giving them money. You're buying a tiny piece of Awesome Gadgets, Inc. and becoming a part owner. Now, where do you go to buy and sell these shares? You can't just walk up to the company headquarters. You need a marketplace, and that's where stock exchanges come in. Think of the New York Stock Exchange or the NASDAQ. These are the giant organized markets where shares of public companies are traded every second of the business day. They don't set the prices themselves. They simply provide the secure and regulated platform where all the buying and selling happens. It's the central hub for all the action. Okay, so what makes a stock's price go up or down? It's not magic, and it's not a secret committee deciding the price. It's one of the oldest concepts in economics, supply and demand. If more people want to buy a share of Awesome Gadgets than sell it, the demand is high, and the price gets pushed up. Buyers are willing to pay a little more to get their hands on a share. On the flip side, if more people are trying to sell their shares than there are buyers, the supply is high and the price falls. Sellers have to lower their asking price to find a buyer. That's it. It's a constant tug-of-war between buyers and sellers, and the price you see is simply the point where they last agreed to make a trade. So how do you, sitting at home, connect to this massive exchange? You can't just call the NASDAQ and say, "I'd like one share, please." This is where your broker comes in. Companies like Fidelity, Charles Schwab, or apps like Robinhood act as your middleman. They are the licensed members of the exchange. When you hit buy on your app, your broker instantly sends your order to the exchange. They find a seller for you, execute the trade, and record you as the new owner of that share. They handle all the complicated plumbing, making it possible for millions of regular people like us to participate in the market. So, from a company going public through an IPO to its shares being traded on an exchange, driven by supply and demand, and all facilitated by your broker, that's the journey of a stock. It's not a casino. It is a powerful mechanism for companies to grow and for individuals to build wealth over the long term by owning a piece of that growth. Understanding the mechanics demystifies the process and empowers you to be a smarter investor. Thanks for tuning in to the Babalian Money Show. If you found this breakdown helpful, hit that subscribe button for more insights into the world of finance. See you next time.